Seems to me it's more than just the drag on the earnings side of things.
Yep.
There's a broader global macro piece to what's going on here. I think, one, you've seen obviously US yields start the sell-off. That's really the 10-year yield was, I think, the catalyst really for the move down. But you've had the China story really boiling under there. I think it's been absolutely crucial. The Saudi story as it relates to oil has also been, important. And even in Europe, of course, you've had the Italian budget story. So you've got a lot of different elements that are kicking in, I think, and are kind of fueling or adding some fuel at least to the downswing we're seeing in US equities.
In terms of what that means for the US dollar through the end of the year?
Yeah, I think it's still looking pretty solid, but mostly solid versus the riskier currencies, the commodity currencies that are typically more sensitive to things like risky assets like equities. The emerging market currencies in general are kind of, turning down, have had a bit of a torrid time of late. But I think you're going to see the dollar pretty much sideways vis-a-vis the euro. Actually, it's weakened today versus the yen. In this kind of environment where you've got yields going down and you've got equities going down, the yen is actually the best performer.
And Jill, your take on equities, especially given the fact that at the lows of today, we were down almost 550 points in the Dow again. Can we now say that we're in a deeper correction for stocks, or are you still positive moving into the end of the year?
Right. Well, we've had this 5% plus pullback, and typically you usually see about 3 a year, so we're on par there. The good news is valuations are now down back to historical average levels. Fourth quarter could be a better quarter for the market. We are still expecting upside from here. Profits growth has obviously still been strong this earnings season, even though it's down from what we saw last quarter. And we're really going to be paying attention to what we're seeing from companies as earnings season really kicks into high gear this week. So far, guidance has generally been okay. We've seen guidance trends from companies that are about on par to slightly better than what we usually see in October. CapEx guidance, which is something that we've seen risk if there is more worry about trade. CapEx guidance has still been positive. Companies are still spending.
So allocation between U.S. and international, Jill, where are you?
So we've seen this wide divergence, obviously, between U.S. and international. Multiples are at levels we haven't seen post-crisis on a relative basis, but the U.S. is still a relative area of strength. We're still seeing upward earnings revisions in the U.S. That's not the case globally. So until we start to see trends bottom out in other areas outside of the U.S., we still think the U.S. looks like the area of relative strength.
Alan, you mentioned China before. Let's talk a little bit about some of the moves we've seen in the yuan and whether you would expect the Chinese to sort of step in and more broadly support that, or whether it weakens as these trade and tariff situations continue to accelerate.
They certainly seem intent on resisting any up move in dollar China above 7. So the protection level seems to be 6.95, just judging by the kind of price action we're seeing. I would anticipate that will continue whilst China is really trying to feel like they can negotiate in a positive way with the United States. If the negotiations turn sour, however, then I think dollar China just weakens, keeping in mind that the underlying pressures, the economic pressures, are very much in favor of dollar China going higher.